Welcome to Peak Oil News for June 1st, 2022. Demand! What demand? One might think that with oil flirting with $120 a barrel, the demand for oil was clearly on the rise. But OPEC Plus doesn't seem to see it that way. OPEC Plus has decided to revise its demand outlook for oil in 2022 down by 200,000 barrels per day. According to a report from the Joint Technical Committee of OPEC Plus, the organization decided to drop its demand growth outlook from 3.6 million barrels per day down to 3.4 million barrels per day throughout 2022. This is down even further from an earlier projection regarding demand growth back in March, which believed that demand would grow throughout 2022 by around 4 million barrels per day. OPEC Plus meets on Thursday to solidify quotas, which are expected to rise only moderately, and to discuss the possibility of Russia being removed from the organization, a move many commenters find unlikely, particularly as Russian Foreign Minister Sergei Lavrov visited Saudi Arabia on Tuesday to meet with his counterpart. Both parties praised their mutual cooperation. Another one bites the dust. Netherlands cut off from Russian gas. The Netherlands have decided to follow the dictates of EU ministers and refuse to pay for gas in rubles, or through the use of the Gazprom bank mechanism, which converts euros to rubles. In response to this refusal, Gazprom has cut off the supply of Russian gas to the Netherlands. The cancellation of the current contract is slated to be for the period between May 31st and October 1st, 2022, entailing around 2 billion cubic meters of natural gas, or around 5% of Dutch yearly consumption. Again, please note that's a 5% cut in yearly consumption, but felt or received all within 1 quarter. Dutch Minister of Energy and Climate Rob Jetten said that the effects of the Russian move are almost nil, as there is no threat to any crucial physical gas deliveries, and he believes that Dutch consumers will still be able to use natural gas as usual. This is in part because, according to Dutch law, in times of energy shortages, such as the current natural gas crisis, volume reductions will occur first in several energy-intensive industries, such as steel. Of course, this could lead to the unhappy outcome, in which you can afford to buy gas to heat your home. You just can't afford to find a furnace in which to burn it. The whack-a-mole hydra of energy scarcity will see many such tragically ironic circumstances arise. This is what happens when governments try and manipulate markets for, as Thomas Sowell puts it, scarce resources with alternative uses. More on that in another episode. The fray between the Netherlands and Russia also portends to a longer and more intense struggle between EU gas consumers and Russian gas providers, as the Dutch-Russian gas relationship was a long and deep one. In other words, if this can rupture such a historically strong relationship, we can assume the newer and historically callower economic relationships between other EU members and Russia will break even easier. Expect more countries to join the ranks of Poland, Finland, the Netherlands, and Bulgaria, as locations now blacklisted from Russian energy. This circumstance might explode also, as the LNG spot market volumes grow tighter and tighter, and if it reaches a tipping point in which it becomes an all-out bidding war for spot market gas, expect kaboom in LNG prices. And now for a little more positive news, at least as far as the energy market is concerned. Permian Basin growing even faster than Iraq. Oil production in the Permian Basin is on pace to increase almost 1 million barrels per day by the end of 2022 to reach approximately 5.6 million barrels per day, much more than the growth we see in Iraq, which is on target to increase its supply by about 2/3 of that. An analysis say daily production in the Permian could hit 6.5 million barrels per day by the end of 2023. This is a 6-fold increase from the 2010 average of only 1 million barrels per day in the Permian. The Permian has become the hotspot for U.S. oil production thanks to significant resources, low break-even costs, and high oil content. This trend is only likely to continue as global oil markets struggle with supply constraints and the demand for oil shows little sign of easing, says Espen Erlsken, head of upstream research at Rystad Energy. And this production increase is not only in the Permian. All 5 major U.S. oil basins are expected to increase output up to about 9 million barrels per day by 2023. Increased capital flows into the Permian are one main reason for this increased production. Investment in the area has doubled since 2016, going from $10.5 billion to over $23.5 billion this year. I decided to give you some positive news regarding energy markets to close. Have a good one. I will be back tomorrow. Thanks for watching.